I just went and did a little bit of a gun workout outside. I went to ABC Refinery and I got our bodyguard to hand me the gold bar. Have you had a shot yet doing that? 12 kilos is actually quite hefty. It's actually quite a workout on your wrist. I wasn't expecting it when he gave it to me. And then I got a chocolate bar as well for my troubles, which was just wonderful. We are going to start this session with a fellow that draws a crowd in the last 12 months wherever he goes, and today was certainly no exception. If you happen to go downstairs, you'll have seen lots of people holding little banners for this gentleman here. They're slightly misguided because, as we all know, where he is mining, what's upsetting these particular human beings is a historical mine. So they need to come in and actually have a listen to you. That would actually be very, very helpful. So I thought of other reasons that they might be down there. A crowd might be here to listen to Andrew. Is it because they've found boron recently in Mount Lindesay? Is it because yesterday they made an announcement of a potential rare earth discovery near, is it Golden Grove North in WA? Or is it the fact that they're looking to drill later this month? All of those would be reasons to be a crowd and listen to this man. Would you please welcome our MD of Venture Minerals, Andrew Radonjic, to start us all off for session 2.
Thanks for that comprehensive introduction there, Chrissy. Yeah, good morning, ladies and gentlemen, and it's great to be here at the 19th RIU. It's a shame that Stuart's not here to be with us, as unfortunately we've had a good relationship over that period of time, and certainly we've worked very well with the vertical events team over that period. So thanks again for holding another successful event here in Sydney. I'd like to talk about our flagship Mount Lindesay critical minerals project. You know, we've got tin, tungsten, and now boron, so they all are critical minerals and in various jurisdictions throughout the world, particularly tungsten's on everyone's list. So I'll talk about that. I'll talk about the Chalice Mining's activities on our Southwest project in WA, and about our recent push into the rare earths sector. I'll probably focus on Mount Lindesay, as I said. The previously mined Mount Lindesay tin tungsten project has already had $45 million spent on it. More than 100,000 metres of diamond core drilling, completed an open pit study back in 2012, and it's one of the largest undeveloped tin tungsten projects in the world. The project's located in a Tier 1 jurisdiction that already has reached net zero emissions. That's right, northwest Tasmania, or Tasmania, is already net zero, and that's because of all the hydropower and wind power that's generated and exported through the Bass Link over the Strait to Victoria, to the mainland. So tin price at the moment are well above the 10-year average. They've been double the price they are today, to around about $26,000 per tonne. It's 3 times the price of copper, which most people probably don't realise. Tin is definitely an EV metal, and it's more importantly critical to the world achieving a green economy. And I'll hopefully enlighten you about it today, and certainly the time for tin is now. Here's our disclaimer. A little bit about where we are in Mount Lindesay. We've commenced an underground feasibility study by collecting another 10 tonnes of metallurgical samples. So we started drilling there in late 21 to verify a more simplified processing route, which we've been working on. And that's for recovering the tin and tungsten mainly, and also the magnetite. But in parallel, we'd engaged CSIRO to have a look at what we believe is a great opportunity for a project, the tin-rich bore rates at Mount Lindesay, which we've already identified but didn't have a processing route. Much to our pleasant surprise, they've identified that in China and Russia, they've been processing this material for several decades commercially in large volumes. So we're looking to use those techniques and add that to our flow sheet. So currently this product goes out in the tailing stream. So it'll deliver a large economic benefit to the project. Now, underground study will also see a new design, which will have a dramatic reduction in the footprint, using battery electric driven equipment, placing tailings and waste rock back down the hole in a mine that was originally started over 100 years ago. And those are the facts, and those people out there who protested yesterday would not listen to that sort of thing. So remember, this is not a pristine area. A little bit about the corporate side of things, trading around 1.8 cents. We're doing a share purchase plan at the moment with a 1 for 3 attaching option. Market cap's just in the low 30s. We've been up to $200 million almost 2 years ago to today. A lot around the iron ore price and Chalice's activities on our Southwest project. And you can see the tin price has bubbled along. It's obviously come down a lot since the highs of 50,000 in March last year, but 26,000 is still quite respectable, but it should be certainly a lot higher. This is the team that started Venture Minerals. So back in 2019, when the market turned, we were able to sort of pivot back onto our advanced Tasmanian assets. Like I said, I'll focus on Mount Lindsay, and I'll touch on the Chalice JV activities and the rare earth later in the presentation. As you can see, there's if you've been in the mining sector for a little while, you'll know some of these great names in the northwest of Tasmania. This district's got a 140-year mining history. Originally started on the back of tin when philosopher Smith made a discovery near Waratah there. But you've got the Rosebery copper lead zinc mine, got the Hellier discovery, which I've placed here, Renison Bell, a large world-class tin asset, the only tin mine in Australia, just down the road from Mount Lindsay. The Savage River magnetite deposit, the only magnetite mine, it's been going for 60 years. Mount Lyell's a little bit off the map, 120 years copper gold project. You know, there's a great world-class deposits all over. But just on King Island, just off the coast there, is Australia's highest grade tungsten mine, which is in the process of restarting with Group 6 metals. So tin, tungsten, magnetite, simply Mount Lindsay is a blend of those three assets. So I spoke about the history there. This is Mount Lindsay in 1914. As you can see, there's not many trees standing. They use the timber to go underground. So extensive mining at Mount Lindsay. It was discovered in 1909 by the same gentleman, Tom McDonald, who found Rosebery. Simply panned it, consider it up the creek. They are mining alluvial tin in the valley next to Mount Lindsay on the Stanley River. This is the mining from 1911. It actually generated power by that pipeline with water coming down Mount Lindsay. So pretty extensive mining, and you can still, if you're very careful, can see the effect of the gravels that were hydraulically mined still sitting there, but obviously it's overgrown. There's 3 meters of rain. The environment's pretty much claiming that back as we speak. A little bit about tin now. For those of you who don't know much about tin, it's in your solar panels. It's tin ribbon. It's mostly in the form of solder, which is the key component. About half of used tin is solder. Solder is sitting in everything that's electronics. It's the glue that holds every bit of circuitry together. And without it, your mobile phones don't work, or anything electronic doesn't work. So tin's been called the spice metal on occasions, but it's only small amounts of tin. It's highly conductive. It's rust proofing for tin cans, albeit micron thick layers, but very much a small amount of tin makes a big difference to our world, and it's very much part of the electricity-based economy going forward. Like I said before, it's about solder. The 5G network will require more tin. You know, for this super cycle we're going through at the moment, this technology super cycle, we need another 50,000 tonnes of tin metal per annum. We're currently producing about 380,000. So that's a lot more tin's got to be found. And we've got to remember that half the world's tin is alluvial. So it's not responsibly sourced, and Mount Lindsay is a hard rock mine, and it will be responsibly sourced. Even at today's price of around that sort of $25,000 a tonne figure, if it went to $100,000, your mobile phone would go up in terms of tin cost by 10 cents. So it has very little impact. So obviously I'll wait for the day when it does go to 100,000, but the fact that the price hasn't actually been high enough to push new mines into production. So there will be a lag, and as we go looking to source sustainable tin, we'll need to be turning to projects like Mount Lindsay. And talking about most of the tin in the world, it actually comes from jurisdictions in which ESG risk is a big factor. And you can have a look at that list there. You can talk about China, Russia, Indonesia, Egypt. Indonesia, it's all sourced by dredging the seafloor or the river channels. So no thought about the environment there at all. Myanmar, they just stopping production there. So that's all of a sudden had an impact, caused the price to go up by 10%. That's 10% of the world's production goes straight into China, the Congo, etc. So, Australia is certainly, a jurisdiction which, sustainable tin and tungsten production is quite possible. Talking about tungsten, I suppose the big thing about tungsten is it's used in military applications. In 2021, tungsten was about 8% of the use of tungsten. That amount of tungsten that's being used will double. It actually went up by 24% last year in 2022, and will go up to, will double in terms of the amount of tungsten being used by 2031. So it's a big driver for the tungsten price going forward, and very much it's about all the tungsten being used up in the weapons that are being fired from Russia down to Ukraine. So, for example, the 120 kilogram in a HIMARS warhead. Don't need many of those to chew up your tungsten. And NATO is certainly running out of all its supplies it's been giving to the Ukraine. Now moving back onto the project, you can see 100,000 meters diamond core drilling. We've got a drilled out deposit. We don't need any more infill holes. 70% is measured and indicated. 80,000 tonnes of tin metal in the work we've done so far. 3.2 million metric ton units of tungsten trioxide, which is about a third of King Island, stuck in the same rock, along with 15% of that rock being magnetite, which we can get a 65% con. So it truly is polymetallic. You can see those grades there, a bit like Renison, a bit like King Island for your tin and your tungsten. But when you look at this next slide about the boron, and you would have heard probably the Ioneer talk, they've got very much similar grades material, and the tin boron sits around our higher grade tin zones. We can't extract it in the current flow sheet, but some of those grades are very comparable. And if you don't know much about boron, it's because it's a bit like tin. It's used in a lot of things: borosilicates, glass. It's in fertilizer, computer screens, and it's in magnets as well. So, and of course that goes into the turbines and EVs. And you've got boron carbide, which is one of the strongest compounds in the world. So, boron is very much they call it the fifth element of decarbonisation. So, we're looking forward to adding a significant amount of boron, and I think our tin potential with all those other targets will go up quite dramatically in this area. So we look forward to informing the market on the scale of that opportunity. Like I said, tin price are above 10-year highs, but I'll talk a little bit about the exploration potential now. So in grey labels are the tin boron skarns. There's a whole bunch of these skarns sitting there which have hardly drilled a hole in because of the boron factor and because I've been focusing on getting drilling development done. I can see at least another half a dozen of these skarns, which 6 more Mount Lindsays. So we're going to translate it to a fair bit of tin, but that will take time to drill out. But like I said, we're looking to get some sort of exploration target out there to give the market an idea on the boron side of things. Just moving into our reward project, there's the main part of Mount Lindsay. This is a long strike from Renison, about 12 k's away. And we had a little surprise about late last year when we found we had rare earths sitting in the clays around the tin zones that have been mined historically. So there's historical mining on top of this reward. And we also found in the alluvials, we had some exceptional grades of rare earths. You got what, nearly 0.5% neodymium, 0.4% praseodymium, elevated terbium, and dysprosium around 0.5% as well. Just quickly moving on to do Julimar story. This is a JV we did back in July 2020, about 3 months after Julimar was discovered. They came knocking on our door, and this is the reason why. It's a Julimar lookalike, as stated by Chalice, not by Venture. Mag features very similar. The EM, very similar. We did the JV. We already had massive sulfide. We were looking for VMS deposits, copper, lead, zinc. We found nickel, copper, cobalt, 2.5 meters of massive sulfide. We didn't know what it was because Julimar didn't exist at that point. But having Chalice JV into it has been a pretty important thing so we can realise the opportunity here. They've done a bit of drilling on the low-hanging fruit, so to speak, but now they're very much focused on these new targets that are delineated with Yorga. They've spent their first amount to get to 51%, $1.25 million. They've now elected to go another $2.5 million to get to 70%. So that's they're currently working on that, developing new targets, and just quickly, there's a third target here and a fourth target out to the east. And they're looking to start drilling this in the fourth quarter of this year after the rains stop in southwest. So we're operating a state forest, kind of rings a little bit of a similar bell to Julimar. Just a little bit about the rare earth opportunity picked up in WA recently. Golden Grove North, 12.5% total rare earth rock chip. We're going to be drilling under that target soon. We picked up the Bandy and Brothers projects based upon a state government data set. The first and third highest results in that data set we have pegged. And yesterday we announced that we'd actually picked up a ground just to the south called the Iron Duke project, which had an intersection of 49 metres at 1300 ppm from 12 metres to the bottom of a hole. Two holes, 200 metres apart within 150 square kilometres. And in the area, we've got no drilling. So it's probably 40 kilometres away to the next drill hole. This opportunity is wide open, and it's got a granted POW, which means we can start drilling that later this month. And I'll leave it at that. Thank you.
Well done, Andrew. I'll just put the note up to the back desk to say how many slides exactly does Andrew have left, and do I need to stick my size 8 very close to his posterior? You did well. Good clean up there. We're going to talk about lithium in a moment. Before we do that, can I draw your attention to the screen, and we'll pop up our phones. Next question. This is a little bit of Dorothy Diggs. What is your favourite battery mineral? What is your favourite battery mineral? If you can stick your phone up on that one, take the picture and answer that, and that will help our friends at Euros Hartleys to compile their results for us at the end of the day. So I said lithium, that's where we're going. We're going to the number one, the premier address for hard rock lithium in the world. Where would that be? Where would that be? I'll have to bribe you with more biscuits. So you've been listening intently, I know, for the last 24 hours at least. So Western Australia is the claim for that address at the moment. And this is a company where it was nickel first and then lithium. And we're going to hear that story more frequently as the day goes on with a couple of the other companies too. But this is St George Mining's unique story that we're going to hear today, their unique investment opportunity that they're going to outline for us. They discovered lithium at Mount Alexander while they were doing their nickel, and thought, oh, that's interesting. Then you added 7 more projects. You acquired 7 projects last year, 14 licenses. So I'm sure we're going to hear about that. And I should sit down before I take the rest of your project. Is that correct? John, you know why? You've stolen my best lines. You know why I'm hedging my bets, because I've seen your name so many times and I always get it not perfect. So can you introduce yourself perfectly with your last name rather than me tripping over it?
Thank you very much. I'm John Prineas.
Please make him welcome, everyone.
Chairman of St George. Thank you very much. So yes, we're very much in the battery mineral space, fueling the future. It's a great place to be at the moment, given the very strong supply and demand dynamics, very favourable. You're hearing lots of statistics about what great demand is going to be for nickel and lithium and the other battery metals. Just a few statistics on this page. You can see very, very strong demand growth for EV cars. It's not just EV cars, it's other energy storage solutions, etc., that want to consume lithium and nickel. You've got 2 of the major players, Albemarle and BHP, talking up multiple increases in demand for their respective commodities of lithium and nickel. So nothing else, nothing new that you don't know. The real question is, where is the supply response coming from? Where is all the new supply coming from? There's only one way, and that's exploration and development of new projects. And the only way you're going to get investment in those kind of opportunities is if the incentive price of that metal is high enough to justify it. So very strong outlook in our mind for a good, strong nickel and lithium price going forward. The best statistic, well, more of an anecdote, is this quote from LG Chem, the CEO at LG Chem. So this is one of the top 2 battery makers in the whole world. I'll read it because it's so good. We are preparing ourselves, first of all, to secure supply of raw material, which is more important than the price. Our first and foremost priority is to secure enough raw material for the future. Number 1 priority is to secure supply. It's more important than the price. That's music to a mining company's ears, and another indicator of a very strong price outlook in that space. So we're very much focused on lithium, nickel, of course, and we've also got platinum group metals, copper and cobalt in our mix as well. They're all growing demand. Western Australia is the #1 hard rock lithium address in the world, and Australia produces more than 50% of the world's lithium. So it's not surprising there's been a bit of foreign interest in Western Australia and lithium projects. So last year we signed up 3 global battery manufacturers as strategic partners. Shanghai Jason and Sunwoda have already given us $2 million each to help along with our exploration. They're world leaders in their space. Shanghai Jason, #1 in cathode precursor materials, supplies a lot of their product to CATL, #1 battery maker. S-Volt is the battery arm of Great Wall Motors, one of the big automakers in China. They're a standalone company and supply to more than 30 companies worldwide. And then Sunwoda is basically #1 in portable lithium-ion batteries. Your iPhone or Samsung probably has a Sunwoda battery in it. So very strong interest from these people. They can see the long-term demand for lithium. They're coming down the curve into the exploration sector, which is where we're at, investing in the hope that they can get first in the queue for offtake when the time comes. Quick corporate snapshot, just a small market cap at the moment of $36 million. And the direct comparison there is our neighbours out at Mount Alexander, our core project. Red Dirt Metals just changed their name to Delta Lithium. They're up to about $220 million market cap. So we think we've got very similar geology to them. Hopefully, as we keep drilling, we can prove up mineralization similar to them and close that valuation gap in our market cap. Still got cash on the balance sheet to do lots of drilling, so lots of opportunity to deliver the results, to get a re-rating. The directors and management, you're probably aware of most of them. The real key, of course, is our technical team. Julian Hanna joined us last year. He's a legend in the nickel space in particular with Western Areas, but also had success with Mod Resources, a copper discovery. And our other team, Charles Wilkinson and Dave Mahone, are here. They've got lots of experience with Western mining, Western Areas. They're here if you want to have a technical discussion with them. So our project portfolio, all in Western Australia. Our flagship is Mount Alexander. That's where we've been doing nickel and copper and PGE exploration. We have discovered some wonderful mineralization. We still haven't found anything really big in terms of volume to get the market super excited. There's definitely some deposits there which can be monetized, but we're still trying to find the big one. That's one of the reasons why Julian Hanna joined us last year, to try and help us find the big one. So keep watching that space. But just down the road from where we were exploring for nickel, Red Dirt, Delta Lithium, made their really good lithium discovery. So we decided to have a look at our project, and lo and behold, we've got lithium there as well. Our lithium success has generated more interest from our strategic partners to accumulate more projects in that area. So we bought 7 lithium projects in Western Australia in our subsidiary called Lithium Star. I'll focus on that in a second. We've also had the Wurganji project, which is again in Western Australia, Yilgarn. That has rare earths and copper and nickel potential, as well as the lithium. The Patterson is up in the Pilbara, the Patterson province, just up from Winu. That's got copper gold potential. We've done our drilling up there. We've got the right kind of rocks, but we haven't got the high grade stuff just yet. And the 2 last projects are Agena and Broadview. So they're in the western margin of the Yilgarn. You all know about Chalice and its discovery in the western Yilgarn. So we had a close look to see if there's any other overlooked projects in this western Yilgarn area. We picked up Broadview and Agena. We think they're highly prospective for nickel copper PGEs. Mount Alexander. So Red Dirt, I've got to try and call them Delta Lithium, but you've probably got the same problem as me. They made their initial discovery back in October 2021, proclaimed this area a new lithium province. So we focused on trying to test our ground as well. It seems like the Copperfield granite, which is that area to the east of where our tenements are. Red Dirt is the green, we're the red. The Copperfield granite on the east is the source of the mineralized pegmatite. So it looks like we've got a very similar geological setting. It's a 15-kilometre long corridor, so it's lots of opportunity to explore and try and get similar success to Red Dirt. We have had some early success. These are the outcropping pegmatites, so these are the rocks that host The lithium mineralization, we do have them at surface, so that's a really great plus. Big, thick units. We do the rock chips, of course. We come up with very high grade lithium oxide, 3.25%, plus cesium, tantalum, and rubidium, which are great markers for lithium mineralization. We did a small drill program late last year. Every drill hole of the 20 drill holes intersected pegmatites up to 14 meters thick. They continue down about 200 meters below surface. They're open to depth. We just didn't drill any deeper. And we did see some high-grade lithium there as well, 1.8%. So that program gave us enough encouragement to start a much bigger program this year, 20,000 meter, up to 20,000 meter program. It's currently in progress. I think there's no doubt we're going to hit lots more pegmatites and lithium. It's just a matter of putting it all together. To put the 20,000 meter into context, Red Dirt drilled about 60,000 meters to get to their maiden resource. So 20,000 meters is good, but it's probably not enough to get us to our maiden resource, but it's probably enough to show us where the juicy bits are to keep going. The one really sort of standout result from the drill campaign was at the Manta prospect, where we hit a 121 thick pegmatite. So if you're hitting 5 or 10 meters, you're pretty happy. If you're hitting 50, you're extremely happy. If you're hitting 121 meters, you're really quite wondering what's going on here. So the Manta prospect is 1,000 meters long. It was a seismic anomaly picked up from a seismic survey. We drilled it thinking it might be nickel sulfide, but ended up being pegmatite. So 121 meter continuously thick pegmatite, all up 255 meters in that hole. We're still waiting on the assays. There's definitely some crystals in there that look like lithium, but we just got to wait for that assay to see how well mineralized that's going to be. Nickel, of course, is historically our main game up at Mount Alexander, so we're not going to forget about that. We're just taking a step back, trying to find out where the big deposit might be, reviewing our structural interpretation, reviewing our geophysical data. But it's a wonderful mineralization up there, high grades of nickel, high grades of copper, high grades of cobalt and platinum group metals. We've done some metallurgical work with XPS, the Glencore subsidiary in Falconbridge, Canada, confirms that we can easily monetize this into a separate nickel and copper concentrate with high PGE credits, high cobalt credits. We've gone over to Canada because that's where they've got the similar style of mineralization, the combination of that commodity suite, as Western Australia typically has a straight nickel or straight nickel and copper. We want to maximize the value of this mineralization. So we'll hopefully be doing a little bit more work there, trying to find the rest of that wonderful mineralization at Mount Alexander. Lithium Star is our subsidiary. We want to bulk up our lithium credentials because that's an area we see great growth in. All these 7 projects are in the southeast Yilgarn. This is starting to be referred to as a super province for lithium. You will see we have the white labels are our new projects, the grey labels are the existing mines or the existing deposits which are in development. I've listed most of the high profile deposits there, so very, very well-known deposits like Mount Marion, Mineral Resources in Ganfeng, and Earl Grey deposit, of course, Wesfarmers SQM. And there's M&A activity starting to emerge in this area. So Essential, which has the Pioneer Dome, was under takeover offer by IGO and Tanchi. Mineral Resources came out and spoiled that by acquiring a 19.9% stake. Now there's talk that Mineral Resources, which is in Mount Marion, of course, is trying to accumulate a stake in Red Dirt, Delta Lithium, with a view to accumulating more resources in the area and building a lithium hydroxide plant. So certainly these are all very big players. They're not just going there to accumulate small resources. So it's going to be very interesting what transpires here. We're lucky enough to have 7 new projects here. They're early stage. So there's not been any drilling there, but there have been pegmatites mapped. And the right kind of on strike from the existing deposits. So we'll be doing a lot more work there, and hopefully we'll get lucky and figure in any M&A that goes on in that region. The Woolgangi project is another new project we added this year. So some of you may have heard us talk about the Ida Fault up at Mount Alexander. It's a control on many big deposits in Western Australia. In the lithium space, Kathleen Valley, the Liontown, under $5.5 billion takeover from Albemarle. There's Kathleen Valley deposit is controlled by the Ida Fault, and of course Mount Ida, the Red Dirt deposit, pretty much on the Ida Fault. So it's a very good a package of tenements here, about 100 kilometres of the Ida fault. We have seen pegmatites there. There has been some historical drilling for nickel, which actually intersected rare earths, never been followed up. We'll be following that up. I think we're going to get some early hits of rare earth there. And there is some nickel and copper potential there from sniffs in historical drilling. So we'll be getting on the ground and doing some exploration there as well this year. The other project I want to highlight is the Agena project. So very early stage. It's up in the Northampton block, Western Australia. So the Western Yilgarn. The red dots you can see on that map are all little historical mines. So there was outcrop there. The old timers like that. They went there and mined small deposits of lead, zinc and copper. They didn't touch our ground because it's got about 20 meters of sand cover, so they wouldn't know what was there. We've done some modern geophysics over that. It's come up with some very strong magnetic features. Those magnetic features, we believe, are potentially a layered mafic intrusion. Those are the kinds of things that host nickel copper PGs in Western Australia. So very exciting project. Even major mining companies have come and wanted to talk to us about this. We've said, no, go away. We're going to drill this ourselves. If all goes well, we'll be drilling that next month. You never know what we're going to find there. It could come out of left field as a really strong result. Okay, that's the presentation. Thank you very much. We've got a booth outside, so please come and have a chat to me and our technical team if you want any more information. Thank you very much.
Thanks so much, John. So we're going to change continents now. We're going to change resources. We're going to Arizona and copper, the best jurisdiction in the US for copper. The company is New World Resources, and at the helm of the operations, this fellow here, not wearing his American cowboy boots, but his Aussie cowboy boots he's got on down there, his RMs. This is Michael Haynes. I went and had a chat with him at the booth before I came in, and there were a couple of people there with their name tags on, and beneath their name tags, they had investor there. And I said, they seemed fairly heavily invested in what he had to say. And I said, well, why are you investing with him? What's the reason you're investing in New World Metals? And they both just smiled and said, because of him, he's a great guy. So let's hear what the story is. Convince us with the great story and your personality, which has obviously swayed at least two people out there, why we should come on board with New World Metals. Would you please make him very welcome? New World Resources, excuse me.
Thank you, Chrissy. Thanks very much for everyone attending here today and for RIU for putting on the conference. I think it's an exceptional turnout again. It's a pleasure to be here. I'm going to spend today's talk just focusing on a single project. New World is focused just on the Antler Copper project. We've owned the Antler project for 3 years now. That is our firm focus, and it is actually a rarity in this industry where every step along the way in the last 3 years, things have got better and better at Antler. We acquired it 3 years ago with a deliberate strategy to build a mine. It is a very high-grade copper deposit, and we saw that this was an opportunity to resume mining. We can see an old head frame here in the photo on the screen here. The project was last mined in 1970, and we see this as an opportunity to resume mining at a very, very high-grade copper deposit in the second half of this decade. It's a deliberate strategy to make the mine, to make the deposit bigger and to get it into production. And over the last 3 years, we've had phenomenal success doing so. 18 months ago, we declared a maiden resource on the project. It is one of the highest grade copper deposits in the world, certainly in the top 30 on a copper equivalent basis, which lends itself to being a very high margin operation. We've now completed a second scoping study. So we completed a scoping study on the development of the project in July last year. And just last week, we updated that scoping study. And the updated scoping study is demonstrating exceptionally robust economics for developing this project. And hence, we are now pushing this firmly to production. But we've only spent 3 years exploring the project to date, and there is still a huge amount of untapped potential. We have delineated enough to start a mine, but the mineralisation is open at depth, it's open along strike, and indeed, there's a very high probability there'll be a cluster of these VMS deposits in this immediate vicinity, and we continue to explore for such. Just corporately, we've got a market cap of about $80 million, and I think as I progress through this presentation, then I don't think there's a managing director out there who thinks their company's undervalued, but I think as I progress through this presentation, I'll show you the value proposition of the development of this project and the exploration potential of this project, then I think most of you, well, hopefully you'll come away agreeing with me that we are heavily undervalued. We have got $5.5 million cash at bank. We've deliberately assembled a diversified but very strong team, and we continue to expand that team so that we can build this project to production. Our chairman, Richard Hill, is a lawyer and geologist who's been involved in corporate finance for the last 20 years. Myself, I'm a geologist and geophysicist, also involved in corporate finance for the last 20 years. Tony Polglaze, a pseudo-executive director, even though his formal title is non-exec director. Tony Polglaze is a metallurgist and an electrical engineer and has worked on at least 20 mines around the world, including commissioning new mines. Tony's intimately involved in the development of this project. And Nick Woolrich recently joined the board late last year. Nick's a mining engineer and is taking a very, very active role in our economic studies. So very good team to continue to build out this mine. Location-wise, we could not be in a better part of the US. Arizona, in 2021, was by the Fraser Institute, was regarded as the fourth most attractive jurisdiction to invest in globally. This most recent survey from Fraser Institute now rates Arizona the seventh most attractive jurisdiction in the world to invest in. It is a proven jurisdiction where you can develop mines. 70% of the US's copper comes from Arizona. It is a pro-mining state. It is a pro-copper mining state. Probably more significantly, up where we are, right up in northern Arizona, it is extremely sparsely populated. There is no surface water, and with very few competing land uses up in the area that we are, and we are entirely on privately owned land, then that is really going to help streamline the mine permitting process. To put the mine permitting process in perspective, then in 2020, one of our neighbours located about 50 kilometres to the west of us at the Moss mine, then they permitted an open pit heap leach gold mine using cyanide on federal lands, and that permitting process took 18 months. So it's a very, very pro-mining jurisdiction. Now, in our case, we are going a much more environmentally sensitive approach. We are going underground only. We are not going to use cyanide. We are going to return 50% of our waste product back underground, and we are entirely on privately owned land. So we expect similar, if not better, timelines for permitting than they faced at the Moss mine. Just honing in now on location, then we're 55 kilometres south of the town of Kingman. There's about 30,000 people living in the town of Kingman. We can get just about everything we need in Kingman. In light blue, there's a power line that's coming 40 kilometres from a gas-fired power station halfway between our project and Kingman. So in light blue, there's a power line that comes in within 700 metres of the old headframe, which is going to be extremely valuable for when we commission the mine, because having mains power is much more favourable than having diesel generation power on site. There is existing road access. This is an old mine site, so the road access is 15 kilometres from the town of Yucca. Through the town of Yucca runs both an interstate highway and a transcontinental rail, and there's an operating rail siding in the town of Yucca. So this infrastructure is very, very valuable to us. It is going to help a pretty expeditious construction period. It will help reduce the costs of capital construction, and it will also help reduce operating costs. Just in terms of what was done previously, Antler was mined sporadically between 1916 and 1970. Only a very modest amount of ore was recovered, about 70,000 tonnes of ore, but it was extremely high grade, running about 3% copper and 6% zinc, or around about 5% copper equivalent. As I say, one of the highest grade copper deposits in the world. Only the thickest and highest grade ore was stoped. It was stoped from underground mining with an inclined shaft that extended down to 200 metres below surface. But all of the previous mining came within 150 metres of surface. When we acquired the project 3 years ago, we saw an opportunity to expand the resource base significantly. Mineralisation was open in all directions. It was open at depth along strike, and it was extremely high grade. So we acquired the option to take 100% ownership of the project, and we commenced exploration. It was a 4-year option to take 100% ownership. After our results, after the first 18 months, we exercised that option early. So New World now owns 100% of the project. We deliberately exercised that early before we declared a maiden resource and then before we declared mining studies, because we didn't want the terms of the acquisition to change. And indeed, since acquiring the project, then the economics of developing this project have got better and better. And I'll talk you through those now. Initially, after 20 months, we declared a maiden resource, which was 7.7 million tonnes. This long section illustrates a grade times thickness on a copper equivalent basis. And what we see is 2 corridors in magenta underneath the historic workings that have exceptionally thick mineralisation. Universally at this deposit, the mineralisation is high grade. It is just a matter of how thick it is. And so universally, the grades are 3 to 4% copper equivalent plus. But what we do see is structurally underneath the old workings, particularly as we've gone deeper and deeper, and we've now drilled holes that are 850 metres below surface, then as we've gone deeper and deeper, we've found two subvertical zones that are much thicker than the intervening material. That's not to say the intervening material is not mineable. In fact, the intervening material is on average 5 to 7 metres thick, and so it's very, very mineable. But the 2 magenta zones here are greater than 60 copper percent metres. So in order for a drill hole to fall into that category, we must have intersected 15 metres at 4% copper equivalent, or 10 metres at 6% copper equivalent. And we've got results that run up to 180 copper percent metres. So it's exceptionally thick, exceptionally high grade mineralisation. We declared a maiden resource in November 2021, which was down to about 500 metres below surface. And over the last 12, 14 months, we've continued to drill deeper and deeper. And we can see some of the results that we've returned in that period. Consistently very thick, consistently very high grade mineralisation. 42 metres at 3.8% copper equivalent, 10 at 6, 18 at 3.5. The very deepest hole on the project has intersected 21.5 metres at 5.5% copper equivalent. Mineralisation remaining open at depth. And in the adjacent south shoot, so to the left-hand side, we call it the main shoot of thicker mineralisation. To the right-hand side, we call it the south shoot of thicker mineralisation. In that, the deeper holes down there, we've intersected 27 metres at 7% copper equivalent. That's the best result on the project. And subsequently, we drilled a deeper hole under that, which is 10.5 metres at 13.7% copper equivalent. Phenomenal thicknesses, phenomenal grades, which lends us to have the utmost confidence that we are building a mine here. In November last year, we updated the resource. This was a resource update of 48% after 12 months of drilling. So the resource at a 1% copper equivalent cutoff currently stands at 11.4 million tonnes at 4.1% copper equivalent, one of the highest grade copper deposits in the world. Equally, we also declare a resource at a 2% copper equivalent cutoff. Just about every other copper explorer would like to be returning results that are running 2%. But if we dismiss all of the mineralisation that's lower grade than 2% copper equivalent, then we're still left with 9.8 million tonnes at 4.5% copper equivalent. So what that says is no matter what the copper price environment is, then we are very likely to have a viable mining operation, because we could always mine the extremely high grades that are here. But equally, the grades and the tonnages that we've outlined here provide extremely good leverage to higher copper prices. Hence, we're pushing the project to production. In terms of a production approach, we are going to minimise surface impact. Deliberately, we are going underground only. We could have a starter open pit, which would generate a little bit more cash. That has a bigger surface impact. Deliberately, we are not going that route. And indeed, we are going to use dry stack tailings, which in the US is best practice, using a lined facility, which again is best practice. So from a permitting and approval process, we can't do better, which should also help us streamline this into production. 50% of the waste product will be returned back underground as paste fill. Now, we require some sort of material to, because of the extraordinarily high grades here, we want to recover 100% of the deposit. So we require some sort of material to use as paste fill, but it just happens that by using the tailings and putting half of them back underground, then we reduce the surface impact of the project by only having a tailings facility that's half as big as it would be otherwise. And because of the extraordinarily high grades, then we will be using a lot less energy, so a lot less emissions by developing such a high-grade deposit. Essentially, we've got a copper deposit that's running 5 to 6 times the average grade of global deposits. So we've got to move a lot less material in order to recover the same amount of metal as a comparable project. So just last week, we announced the results of an updated scoping study. And what that updated scoping study has demonstrated is that we now have a mine operating at around about 1.3 million tonnes per annum over 13 years that will see production of 15.4 million tonnes of ore delivered to the mill at a head grade of about 3% copper equivalent. So that's a diluted head grade. That's after capturing some mining. And it might seem counterintuitive that our resource base is only 11.4 million tonnes, but we're delivering 15.4 million tonnes to the mill. But that's because of the very, very high conversion of resources to reserves, and we'll be delivering 93% of that resource base to the mill. In terms of production profile, it's almost 400,000 tonnes of copper equivalent metal over the life of the mine, or about 200,000 tonnes of copper metal. Annually, about 33,000 tonnes of copper equivalent metal, 16,500 tonnes of copper each year. CapEx has gone up slightly, so CapEx is 250 million to develop this, but the project is not sensitive to capital or operating costs. It's extremely well leveraged to copper prices, but there's very, very high margins in this. Our operating costs, because the tonnages have gone up, our operating costs have come down 12% to around about $75 a tonne, with all-in sustaining costs of $96 a tonne, for net revenue from each tonne of ore of $197 a tonne. So there's $100 a tonne margin in this. This sees us generate $3 billion worth of revenue US dollars over that 13-year period, of which $1.5 billion is essentially profit. It's free cash flow. We'll be generating on average 153 million US dollars of free cash, or that's about 210 million Aussie dollars free cash each year. And if we discount that at 7% pre-tax, the project has an NPV of 835 million US, or just on 1.25 billion Aussie dollars. That's for a company that has a market cap of $80 million. But further to that, we see that we've got very, very strong indicators. There's a cluster of VMS deposits along strike. We've got lookalike copper in soil geochemistry anomalies over 6 kilometres of strike, and we are going to commence drilling them in a couple of months' time with a view to potentially being able to deliver them to a centralised processing plant at Antler and expand the production profile there. Thank you.
Well done. Okay, we're going to come back to WA. We're going to shift gear and we're going to travel to the coast. Silica, high purity silica. So why invest with our next company to take to the stage, Allup Silica? I asked that question of this man, MD, Andrew Haythorpe. Look at him, mild-mannered geologist. He's a mining analyst as well. In fact, he's in the top 12 gold mining analysts.
A long time ago.
Just take that, just put it there in the pool room. He's also considered currently a global leader in mineral sands analysis. Well, it's written in things, I've seen it there, so okay, it's written there. Just run with it. Usually, and he's been quite quiet now, when I asked him the question, he started to talk, and he talked a lot. So he's got 3 projects to talk about next to 3 ports, so I'm going to sit down and give you maximum time. Would you please make him very welcome?
Thanks, Chrissy. Thanks, ladies and gentlemen. What a terrific copper project that looked like. Moving right into it, yes, back to West Australia, closer to our current location. Allup Silica, the answer to Chrissy's question straight up was basically we're very affordably priced. Market capitalisation sitting at about $4.5 million at the moment, and cash in the bank's just under 3.8 million as I stand here today. So I think many of you can do the math on that in terms of enterprise value, etc. We're a very clean and tidy capital structure. We listed the company almost exactly 12 months ago. It was a bit of a baptism in fire, to be honest. We listed, I think, about 2 or 3 days prior to Russia deciding it had some intentions that it went public with on the Ukraine. So anyway, here we are today, and we're still focused and very much excited by the opportunity to develop not 1, but maybe 2 or 3 projects in West Australia. We've got a good management team, all Perth-based, all with considerable experience between us. So why Allup and why silica? I first started looking at silica about 5 years ago. A colleague brought in a silica project with a view to backdoor listing it back then. And part of their pitch was silica is looming shortage of supply. And I said, you're kidding, we're talking sand, silica sand, I mean, it's everywhere. But anyway, they pointed out some features such as environmental restrictions on silica supply. High purity silica is actually, if you like, rarefied atmosphere in terms of the silica business. So we are actually looking for special material, but not just special material, we're also looking for special locations because it is a bulk commodity. So we do need access, or we do benefit strongly from proximal access to infrastructure such as roads, towns, and of course ports to meet any export market. Part of that also is a focus and a desire for high purity silica, and I'll talk a little bit about that shortly. So as I've already touched on, rising demand and reducing supply. In fact, depending on who you listen to and where you read, silica is one of the stronger growth commodities. It's part of our everyday life, whether it's sitting in your hand or your pocket. This thing is full of silica, so is your computer, so is the glass that you might be drinking water from, so are the window panes as you look through in any building or construction. Literally, the lower quality silica tends to end up in cement and mortar for building and construction. So again, depending on where you read, it's about the second largest traded commodity in the world, according to some. But the more recent and more interesting area of growth, where there is clearly a growth spurt, comes from renewables, and in particular photovoltaic cells, because those solar panels have a layer of glass on the panel, and of course the higher the purity of that glass, the more sun gets into the panel, the more energy comes out. So it's just purely a cost benefit of purity. And so there is a real desire for less than 100 parts per million iron. When you go looking around in West Australia and other parts of the world, it's pretty rarefied stuff. It's not everywhere, contrary to what you might think. First question is, why don't you go to the Middle East or the Sahara? Well, that silica is pretty much, generally speaking, full of iron, which in the form that it exists is difficult to remove, expensive to remove the iron, and therefore it's not very attractive from a commercial or economic point of view. So we really did start our search about 4 years ago for silica sands projects that we thought met let's call it the first pass criteria, where we could start work. So the global rate of sand usage really has grown dramatically. And of course, when you think about building and construction in, let's say, China, or more recently, perhaps the Middle East and some of the mega projects coming up there, massive surges in silica requirement moving forwards. And a proportion of that silica demand will be for the high purity material. And of course, going back to photovoltaics and renewables, it's essential for that. I think there is a strong argument that silica sand is mispriced. It's been mispriced historically because most silica sand mining's occurred off of coastlines in environmentally, what we would now call environmentally sensitive areas around the world. And so ESG really is having a dramatic impact to the effect of reducing silica supply. I was just talking to someone yesterday in the booth, and they mentioned that Indonesia, of course, with its desire to upgrade raw commodities to high value add commodities, is increasingly tightening up on silica sand supply into the Southeast Asian market, at least anecdotally. So Allup's approach, when going back 3-4 years ago, as COVID was just erupting, we were sitting around the table wondering what we all do in Perth, especially with lockdowns and so on. We thought, well, let's really roll up the sleeves and have a look and see what we can find. So what we came up with fairly quickly was a project in the southwest corner of West Australia, which sits primarily between Bunbury Port and Albany Port. Following on from that, we also found some silica, to my surprise, up close to Wyndham, actually, up at the very top end of West Australia. So great location from a customer perspective. And then Esperance further around down the bottom there, of course, Esperance Port. We've got a very large sand mass there that's only about 15 or 16 kilometres away from port. So each project has its own unique characteristics. People ask me which one's going first. The honest answer is we don't know yet, but we do have essentially 3 horses currently in the race at the Melbourne Cup. So let's just have a closer look at Sparkler. This is the first one in the southwest dimension that we started to focus on, and we did some drilling last year and came out with a maiden inferred resource of 70 million tonnes. we've been doing resampling and further work on that, including some bulk sampling, trying different things with regards to gravity separation and magnetic separation, primarily to pull the iron out of the silica. We've had some really encouraging results where, without too much effort, we can get that silica number down below 100 parts per million iron, which is one of our focuses. And of course, silica purity itself, again, is very handy, up in the high 99% range. So when we're looking at transport and logistics for this, we're really not carting much of West Australia around with us. It's mostly valuable, saleable product. The picture down the bottom in the middle there, you can just see some funny white material in the middle shot there on the photo. That's literally just looking through the microscope at the silica sand. You can see that's the cleaned up product where we've pulled the iron out with magnets. And you can see the silica itself is very white, very translucent, very clean. The photo on the left is actually the farmland that we're looking at. It's fairly low value from an agricultural point of view. So again, from an environmental point of view, it's been farmland for the best part of over 100 years. So we're not really talking about causing environmental degradation from an environmental pristine perspective. And the right-hand side's just literally a photo shot of a handful of that sand that we're focused on. So that's situated between Bunbury and Albany Port. There is some capacity at those ports, depending on who you talk to and when. But so far, our initial discussions with the ports have been encouraging. So in terms of Sparkler, just a close-up, looking closer at that area, that's an aerial shot that you can see the farmland there that's been disturbed. And you can see the grid patterns of the cropping and the farming activity. And those grades indicated there 95, 97, 98% and so on. That's raw silica grade. So that's literally what you drill with a hand auger or drill with a drill rig or grab with a hand sample. And as I said earlier, we put that under the microscope fairly quickly to have a look and see if we think it's easily separable from the iron. In the case of the Sparkler, we found that to be the case. And so here we are. And this is really now the subject of us in the advanced stages of preparing a mining lease application. We've got 3 farmers in the area, and we've been working closely with the farmers and, of course, native heritage groups. So Sparkler, great location. Sparkler B and C, we've done some work in the neighbouring farms recently, and again, we're finding great silica. And literally at surface, this is 0 to 2 metres deep. So from a strip ratio point of view, it's excellent. From a mining point of view, this is really as basic and simple as mining gets. There's no drill and blast. Grade control is relatively generous, if I can call it that, especially compared to some of the hard rock mining that we're used to in West Australia. And of course, when we're talking West Australian mining to potential overseas customers, and I'm sure VRX and the other silica companies would say the same, is of course they're very comforted by West Australia's mining culture and history of mining. So yes, we have our permitting and approvals process to go through. On a positive note, we've been through that many times before as an industry over the last 100 years. So just another close-up shot, or just to really re-emphasise the difference between iron in on the photos on the left-hand side. That's raw as you grab it off the ground. You can see some of that yellow material there, or yellow-brown there, iron particles, limonite mostly. And on the right-hand side, the cleaned up silica. And again, you can see, just literally visually see the difference between the high purity that we're aiming for from a saleable product point of view. Simple cleanup process. We really are focused on no chemicals. Dune buggy is, I guess, the second cab off the rank, and basically it's a sand mass that we found not too far, literally, from Esperance Port. Dune buggy has its own little nuances in terms of metallurgy, which we've been doing some work on. And again, we're going through the process there, lining up for further drilling. We did do a survey to confirm essentially the presence of a very large resource potential there. So Dune buggy will be the subject of further work, but the real carrot there for us is just purely the absolute closeness and proximity to Esperance Port, plus also, of course, township and infrastructure. And Pink Bark, we only just announced last week that we've completed our first round of drilling at Pink Bark only a week or so ago. And again, we're very encouraged by what we can see. And again, you can see the sort of farmland that we're dealing with. It's wheat crop for part of the year. And literally the sand and sampling techniques are very simple, very basic, very straightforward for Pink Bark. So samples are in the assay lab. Assays are all weighted. Who knows, 6 weeks, 7 weeks. I'm not sure what turnaround is currently with the lab on the chemical suite that we're doing there. And then last but not least, Argyle Sands. We applied for this again about 2.5 years ago. and we're basically just in the last stage of getting heritage clearance sorted out in the next few weeks. I was quite surprised again. I wouldn't have expected to see good quality sand in this part of Australia, especially so close to some fairly arid parts of Australia. But our grab sampling again was very encouraging. 99% white sand, and again from what we could see under the microscope, iron doesn't look as though it'll present too much of a problem. So once we get the heritage survey done, we hope to be out there drilling very soon. Drilling, very cheap, very cost efficient, very fast. I mean, we're talking 2 to 20 metre deep holes. They're sort of all over in a matter of an hour or so, or less. Small rig, light equipment, very low impact, very low cost, less than $25 a metre all in. So that's one of the great things about the silica sand industry, is you can actually get to a resource inventory of 70 million tonnes, or I think in the case of VRX, they're talking over 1 billion tonnes in some areas. It doesn't cost you a lot of money to get a very large tonnage potential to then start the process of talking to ports and customers. So very simple for Allup Silica moving forwards. It's a combination of sampling, more drilling, more met testing, and talking to more customers and ports as we move forwards. And it's really a process of bringing all those things together at once over the next 24 months, give or take. So it's all up from here, at least we hope. Program of works, most of the permitting and processing, we've been through that now for 3 years. As I said, we did start off about 4 years ago in terms of the company, whilst only listed for a year. We are fairly advanced on a lot of this, and we've got a great team of people. I've been very encouraged as a junior startup literally a year ago. We've had approaches unsolicited from potential customers for the last 2 years, which I was very surprised. They sort of literally are coming knocking to us. That tends to give me certainly confidence and optimism that the looming shortage in high purity silica sand moving forwards is indeed happening, especially the glass manufacturers looking at photovoltaic and that niche market of less than 100 parts per million iron. They're definitely looking and sort of keeping very close tabs on us, and I'm sure all the other silica sand players here in Australia. So I think from a marketing point of view, we're in great shape moving forwards over the next 3 or 4 years to finalise offtake agreements, get through all those steps that we need to, and be starting up a new industry in Australia. So project, purities and ports. Thank you very much, ladies and gentlemen. Thank you, Chrissy.
Thank you very much, Andrew. Now, while I've got a lot of you in the room, you might not want to leave quite yet if you're changing location. Tomorrow, we've got a competition going. To be in the running to win the competition, as we know, again, I'm Madam Lash, you need to be in the room here at 9:15, and that's because the prize is a silver ingot. It's a 500 gram silver ingot, 99.99% purity. Its value today is $618. And I'll tell you, you've got the information up there. So that's information up there. Silver prize for the best guess. I'll outline exactly how that's going to happen, but you need to be in here watching the presentation to begin it to win it. I'm looking to this.
I'll be here.
You'll be here?
Yeah, absolutely.
You've obviously doing something right. You haven't even had to offer a silver ingot to have people come and listen to you. So we'll get involved in the next presentation, but that's something to think about when you're thinking about what you're going to be doing tomorrow morning. Right, so we're going to talk now about high purity alumina. So we're really diversifying your investment portfolio opportunities today, this session. FYI is next up on the microphone. Interesting results recorded from your HPA output recently. A pilot production campaign. I know there's good reasons. You know you're going to talk all about it now. And it looks like, I thought interestingly though, that the same technical attention you have to detail for that is what you are carrying through in the next part in tailoring your product to meet end user specifications. And we like people who are technically minded and who have attention to detail, because that may mean it's something we're interested in investing in. Correct, everyone? Would you please make very welcome Roland Hill.
Thank you, everybody. And thank you, Chrissy. I'm not sure I'm actually that person, but I'll talk about FYI, which I'm happy to do so. Pleasure to be here. Ordinarily, I would just talk about HPA through FYI, but I will actually have 2 projects to talk to today, following on from an announcement that we made yesterday a transaction of MinHub Operations Proprietary Limited, which is upstream, downstream mineral sands, rare earths processing, which is pretty neat. So we're talking more about processing rather than exploration or tonnes and grade, but here we go. So just have to run through the disclaimers to start with. I'll leave you to read those in your own time. First, just wanted to point out our capital structure, a really good board, quite a nice tight shareholder base, market capitalisation about 40 million, probably it moved a little bit since this publication of the slide, but there we go. Cash on hand 9.1 from our last quarter, so we're very adequately capitalised for the work that we need to do, and nice tight structure. So just want to start, because I've had to change my slide deck a little bit to incorporate the second project, so I'll skip through my normal presentation and just go to a couple of key points just to give you a flavour of what we're trying to do. So essentially there, the HPA project, in summary, we are emerging HPA project developer. That's probably our core focus and something that we're very passionate about. We've spent the last 4 or 5 years developing this, and as Chrissy pointed out, you know, we've had some absolutely stunning success in terms of its development, the quality and the purity, very well regarded in the market through the marketing programs that we've done. We have to embark on a program to actually make a lot more. So part of our development program is to do a intermediate demonstration plant. Get onto that in a little bit further, but outside of that, some of those key bullet points there, I'll leave you to read those in your good time as well. Why we're doing the HPA, I think it's quite evident in itself. If you look at that top line, top to left and to right, first and foremost, that very impressive NPV. That's a US dollars, by the way, so at a 8% discount. The IRR impressively high given the capital versus the margin, so very attractive in that regard, and spitting out quite decent profits and cash flows. So that's what drives us. That's what's focusing us on the development of this. We've had a few setbacks along the way, but we're back on track and definitely think it's worthwhile, a great target. I wanted to make a bit of a descriptive about how we can, at a market cap of about $40 million, what's our pathway to realising that NPV of over $1 billion US. It's a very simple thing. We just have to demonstrate the fact that the pathway is clear and that we're structured to do it and address those challenges. So the bottom left there, the pilot plant, that's all done and dusted. We've been running that for a couple of years, a couple of campaigns, producing some fantastic quality material. That was the citer for us to go to the next step on that curve. We're sort of just about to embark on that small scale production demonstration plant, as we call it, SSP. We've got a decision for that coming up in September. We definitely have a schedule that's tightened now to address that issue, but from that, the demonstration of that obviously leads us into the commercial production, something that we're very anxious to do. So what's actually driving the market, and where does HPA get directed to? It's actually a very broad use material. It's put into a lot of different products, but primarily it's driven by two things, two major markets. One is the LED market and the micro LED market. There's some numbers there that suggest how easy or what's the growth, what's the size of the addressable market. Some incredible numbers forecast for this, and it's quite incredible to understand what the applications are. Not only does it go into lighting, goes into a number of different things, TV screens, tablets, watch faces, the whole lot is addressable in this market, and some great forecasts. The second market, and something that's providing a little bit of a sizzle for everybody, I suppose, is the lithium-ion battery market. Obviously, that market's going very, very hot at the moment. HPA will play its role in that. It's used as the separator. It's a ceramic coating on the separator between the anode and cathode. And as the demand for heavier density performance batteries increases, so will the need for ceramics becoming the go-to material for those. And there's obviously a little bit of a threat in some of these battery technologies and the architecture for that. Solid state seems to be a rising option, and it's certainly used there in the ceramic material for that. So irrespective of the battery technologies, the ceramic component in a battery will remain constant. And so this is one of my favourite graphs, actually. It probably speaks for itself. Here we are sitting at 2023. The important line there, I think, is the bright yellow line that goes through that graph. It sort of demonstrates what the supply is. Sort of essentially we're in a deficit, meaning that the markets are strong. Pricing is probably still strong, but as we go on to development in the next couple of years, that market certainly the deficit increases, and that's something that we're aiming for in terms of timing our development for the project to meet that demand. So in terms of our project and where we're sitting, this is an announcement we released just a couple of weeks ago. It's actually a revision of our development. We wanted to reset, re-engineer and readdress some of the market concerns that are appearing because of that market growth. We wanted to contract the development time and speed it up. And we're doing that through what we call through that SSP. We're lifting the production forecast for that. We're taking it from a nominal of about 200 to 300 tonnes up to about 1,000, so we can meet our market expectations and the quantifiable material that we can get for assessment by our offtake parties that we're developing some fantastic relationships over the time, and apparently very well liked, very well received. So we want to make sure that we can deliver upon our promises to get to production by making sure that we have close confidence with our offtake parties. The part that I wasn't so prepared for is the MinHub rare earth strategy. This is an announcement that we made yesterday. I'm not sure whether you've seen it, but I draw your attention to our website. There's a more detailed presentation about that we gave yesterday. I'm only going to hit a couple of the high points and provide a little bit of colour or texture about why we like this project and why we want to invest in it, why we made the transaction. So the MinHub in the strategy in outline, I suppose, is we're acquiring a company from an individual who made 2 to 3 years worth of very good, very astute development work with a number of potential mineral sands producers, as well as downstream production companies. We were watching the story over the last couple of years and thought we'd get involved with it. Incidentally, they're very attracted to doing a scrip deal. They very much liked what FYI was doing and what the opportunities were there for a stock deal. So we purchased the vehicle, essentially called MOPL, so MinHub Operations Proprietary Limited, abbreviated. It has a development plan to construct and operate a mineral separator plant in Darwin. And why Darwin? Darwin has some fantastic opportunities there for mineral processing such as this, and a couple other strategic reasons why it's there. We'll get into those in a little bit later on. But the value add strategy to MinHub is obvious. We partnered well. It's seeking to finalise some agreements that it has been working on over the last couple of years, and it's to me it made a lot of sense. So what we're looking to do now is get on and develop it. Now that we've signed, we're open to go. So I suppose a very important point to explain at this point is why is FYI interested in it. We see that the focus, whilst is still on our HPA project, that remains our core focus. We see that tremendous opportunity, not only with the HPA, but with this. So this is going to be a great augmented project to do while we're continuing with the HPA. We see that through a low capital expenditure over the next year, we have a timeline where we're going to develop a DFS, which will obviously be the proof in the pudding about how we can deliver this project, what it ultimately means. So we're looking forward to doing that, but whilst we're continuing in parallel with the HPA. There's a little bit more detail on the HPA project. I won't go into all that now, so I'll just refer you to the website when this will be, it's on there now. So if you want to get a little bit more information, it's quite easy to read that. And certainly we have a booth, number 2, around the corner. So if anybody wants to have a chat, talk about it further, Neil O'Loughlin and myself are here to talk through that. But I did want to talk about this just quickly. This is how the model works, essentially. Oops, sorry. I'll go back. So just to the right, as MOPL has been working with a number of mineral sands emerging and established. We're seeking to further offtake agreements with them. That their product, mineral concentrates, will go to MinHub. MinHub in itself will be a 50-50 joint venture with Arafura. Arafura playing a very key role in the development of this. Ultimately, we're sharing costs in doing not only the DFS, but more likely the project development in the long run. MinHub will process a number of these suites of products, be able to sell those in their own right. They'll go off to different markets. This will effectively compete with other global markets. We see that we're strongly positioned for that. Through the separation, mineral separation of the concentrates, we'll send the monazite and xenotime to Nolans, Arafura's Nolans project down there in the Northern Territory. They will separate that out for the NdPrs and reach to global markets from there. And also in joint venture between FYI MinHub and Arafura, we'll look to do some other heavy rare earth separation and downstream projects. So potentially very exciting, potentially very large, and something that obviously attracted to us, why we wanted to get into it. So that's our motivation. We see that's key to Australia's strategic minerals, critical minerals strategy. So we want to be a part of that. We see that this is a legitimate thing, and obviously the tailwind in the rare earths, it's probably everybody's talking about it in the room today, between that and battery minerals. Rare earths is essential for us going forward. We think the tailwind with 1,000% demand growth forecast, there's certainly going to be a lot of support. So thank you very much for your time. More than happy to come and have a chat to anybody who wants to talk to us in booth number 2. Have a good day. Thank you.
I don't know what you're thinking then. I think you were the man for that conversation just then. That was great, very insightful. Thank you. Now the room is growing in numbers. I'm just checking some information from my team for something we need to set up. All going. All right. So you heard Jackson talk about Singapore earlier on in the conference, and we went up to Singapore recently. And this fellow here presented to very high acclaim to a number of high net worth investors up there. And he's going to give us the same opportunity today. Now, if you listen to Tony Rovira from Azure speak, this time last year, he was focused on one mineral, and that was nickel. And I said to you earlier as well that a lot of these people who are involved in lithium now have got an interesting story where they've gone from nickel across to lithium. I was having a chat with Tony earlier and I said, how did you get involved in lithium? Because you haven't just walked across and kicked a pegmatite. There must have been something else. And he said he was doing a little bit of bedtime reading, 1950s papers, results papers, as you do. And in those 1950s papers, he saw mention of pegmatites at Andover, at the Andover project, correct. And so he sent out his minions, and his minions came back and said, "You are correct, oh great one." Hence, we have this fantastic project, which I'm going to say may be the reason the room has swelled a bit up the back. Would you please make him very welcome, everyone?
Thank you, Chrissy. Yes, interesting story. Minions, I'm not sure they like to hear that. But, thank you very much, ladies and gentlemen, for the opportunity to tell you the Azure Minerals story, in particular talking about the Andover project As Chrissy said, last year presented here was the Andover Nickel Project. Well, I've had to shorten that down to just the project now, because not only have we got nickel, copper and cobalt sulfide mineralisation and deposits there, but we've also now identified some very high-grade lithium-rich pegmatites on the ground. So this really has become a battery metals project. So corporately, the company's got about 390 million shares on issue, trading in the low 40-cent range, so a market cap of about $150, $160 million as of today. Got $23 million in the bank and no debt, so the company is in a very strong position financially at the moment to advance the projects. The major shareholder is up there is SQM, and the reason we've got that amount of capital in the bank is because SQM made a very solid investment into Azure back in the beginning part of this year, and they invested $20 million for a 19.99% interest in the company in order to gain exposure to the Andover project, and in particular the lithium potential that we had identified at Andover. So the company has some very strong and supportive shareholders there. The Andover project is a 60-40 joint venture. 60% is owned by Azure, 40% is owned by that legendary prospector Mark Creasy, who has held this project for quite a few years prior to us becoming involved 3 years ago. So it's a great opportunity to work with Mark on this one. Andover is located in the northwestern part of Western Australia, in the West Pilbara. You can see there's a photograph there of the area. The project is shown there as a blue outline on the right-hand side of that image, and on the left-hand side of that photograph is the town of Karratha. So it's a 2-hour plane flight from Perth to Karratha, and then a half an hour's drive along the Northwest Coastal Highway, which goes through our project area. There's also a lot of other roads and tracks that go through there, as also there is high voltage power lines, gas pipelines, potable water pipelines, cell phone coverage, and there you couldn't get a better located project for both exploration and the mine developments. And also right just on the other side of Karratha is the port of Dampier, which is a commercial port, multi-user port. So there's opportunities there if we go into production for exporting of product through Dampier port. So the Andover project has both nickel, copper and cobalt sulfides with 2 deposits identified, and also this potential for a large volume of high-grade lithium-rich pegmatites. It is important that we do acknowledge the traditional owners of the Andover land. It's important because it is their land. The local Aboriginal people live very close to the property, or even on the property in places. In order for us to work there, we have to have a very strong and positive relationship, which we have developed so far. And in order for us to actually do any earth moving, any surface disturbance at all, we need to have heritage approvals to be undertaken by the local traditional owners, and they do that for us, and that positive relationship is very strong, and it continues to gain strength at all times. The beauty about this project, or one of the great things, is that the rocks all stick out of the ground. There's nothing covering the rocks there, and those rocks contain mineralisation. So traditional exploration methodology of geologists walking across the ground, boots on the ground, taking samples, looking at the rocks, that is the way by which we've been able to identify not only the nickel and copper mineralisation, but also the lithium mineralisation in the pegmatites. So the photographs there on the left-hand side, there's some copper-rich mineralisation sticking out of the ground in an area which had never been identified previously, and yet it's only a couple of kilometres off the main highway. On the right-hand side, there's outcropping nickel-rich gossans there at surface. That particular photograph is taken from sitting on top of the Andover nickel deposit itself. And the central photograph is a snapshot of one of the outcropping pegmatites we have identified there, which is very high-grade lithium within those the spodumene minerals there. So this talk is mostly going to be focused on the lithium side of things. And this is a zoom in onto the project area. It's 108 square kilometres, shown inside 3 exploration licenses, which are identified there in blue. The red shapes that you can see on there, they are the outcropping pegmatites. Our mapping and sampling, which we undertook through all of last year, has identified hundreds and hundreds of outcropping pegmatites, individual pegmatites. Now, a lot of those pegmatites will actually join together and form much larger bodies, and our mapping is confirming that actually happens. So those pegmatites are all located in a swarm, is what we call, or a pegmatite field, which is located inside that red triangle there. It's a wedge shape. It's about 9 kilometres long east-west by up to 5 kilometres wide on the eastern end of it. And all of the pegmatites we've identified so far are contained within that triangle. Individual pegmatites are up to 1.5 kilometres long and maybe up to 200 metres wide in places. So there's some certainly evidence, early stage evidence, that there's substantial volumes of pegmatites on the ground there. And our surface mapping and sampling, which we undertook last year, was very detailed, and it identifies a lot of high-grade lithium at surface in those pegmatites. So when you're getting 3, 4, up to 5% Li2O, lithium oxide, in outcrop, those are some of the highest sampling numbers that have been returned from any pegmatite or lithium project in Western Australia. And so we're currently drilling at the moment with 2 diamond drill rigs drilling in that rectangle that you can see up there. That's testing AP10, AP11, AP12. We're drilling in that area specifically because it's not necessarily our best target, but it's the only target for which we had heritage approval in place and environmental approval by which we could go in there and do the drilling. Since we started drilling there a couple of months ago, we've been able to undertake environmental surveys and heritage surveys, and over most of that red triangle through there. And those heritage approvals and environmental approvals are expected to be in place within the next week. So we'll be able to spread the drill rig out further from that little postage stamp that we're sitting on at the moment to actually go and drill test on the rest of that pegmatite field, which will mean that we'll be bringing more drill rigs into the project as well. So in addition to the 2 diamond rigs that are operating there now, we expect to have potentially up to another 4 drill rigs operating there by the middle of the year. This is a little zoom in on the area where we're currently drilling. As I mentioned, it's a bit like a postage stamp. It's only a few hundred metres across and through which we have access. So the holes have been collared in a very close proximity to each other, and then have been splayed out to the east and west and up and down to try and get some cross-cutting the stratigraphy and cross-cutting the pegmatites. The 4 holes there, which are shown in blue with the red hatches next to them, that's the first 4 holes where we intersected pegmatites, and contained within that there are zones of lithium-rich or spodumene-rich mineralisation, and that's the spodumene is the preferred lithium mineral that we're looking for. And there's a number of other black lines on there which give a schematic understanding of where we're currently drilling. We've been able to move the drill rigs closer to the outcrop, which is the red zone that you can see. The red zone up at the top there, that's the outcropping pegmatites in there. I think that's AP12. And so we've been drilling through that, and we've been able to get some very good intersections of pegmatite from surface to depth. So that's more of a schematic understanding of where we're actually operating. Once we get those approvals in place in the next few days, we'll be able to initiate the earth moving for the access tracks and the drill sites, and the drill rigs will be mobilised out into the greater areas. But this is what we've actually been looking at. On the right-hand side, there's a photograph there of a drill hole, some drill core from a hole 199, which we drilled late last year. We actually targeted a geophysical target that was considered prospective for nickel. There wasn't actually any nickel in there, in that particular target area, but there was a pegmatite that we intersected, and we got that mapped and logged and assayed, and there's a bit over 7 metres of 1.5% lithium oxide. So relatively narrow width, but it's certainly a very nice high-grade lithium result there in that first hole, albeit a fairly accidental intersection. But it gave us confidence that what we see at surface with the mineralised pegmatites is still going to be mineralised at depth. So on the left-hand side, there's a photograph of a more recent drill hole we put there. It's hole 202. There's a particular piece of drill core there, which has got the white crystals of the spodumene, which is the mineral that contains the lithium, and the dark grey background is quartz. So it's basically spodumene and quartz together in that particular drill intersection, or both of those drill intersections. And the piece of drill core on the left-hand side, that particular piece of drill core was taken down to Perth and given to one of the laboratories, has some high-tech fancy equipment. It was given a hyperspectral analysis, which gives us the mineralogy of the minerals that are within that piece of drill core. So it's not an assay, but it gives an understanding of what the minerals are. And there are only really two significant minerals in that piece of drill core on the left-hand side. It was either spodumene and quartz. So one would expect that when we get the assays for those pieces of drill core, that they are going to be returning some very high grades of lithium. So where to from here for the company and for the rest of this year? Well, we believe that there is the potential here for a very large volume of pegmatites and lithium mineralisation. I've set the exploration department the objective to this year go out there and do your exploration and come back and tell me, do we have potential there for over 100 million tonnes of lithium resources? Now, that's not a defined resource, that's not an exploration target, that is the objective that I've set the exploration team to go and determine. Is that potential, does that potential exist on the Andover project? If it was to be the case, then over 100 million tonnes, it would put Andover in the top 10 sized lithium projects in the world, hard rock lithium projects in the world. So that's the task that's been set for them. The resources and the tools have been given to them. They've got a very large budget. They've got an initial 40,000 metres of drilling program planned, probably 30,000 metres of RC, maybe 10,000 metres of diamond drilling. As I said, the diamond drilling's underway. 12 holes are completed to date, maybe about 4,000 metres so far. So there's a lot more drilling yet to be done, and that'll be kicking off in the next. The acceleration of the drilling program will kick off as soon as those approvals have been received. There's plenty of targets out there that need to be tested, and so we're going to be spreading those drill rigs far and wide across that program, across the project area. And then we also have the nickel. We don't want to forget about the nickel, because the nickel is actually valuable in its own right, because we've got two deposits, and both of those deposits have good high grades of nickel mineralisation. They're the Andover deposit and the Ridgeline deposit. They're close, located in the bottom left-hand corner or the southwest corner of that of our project area. And together those two deposits total about 6 million tonnes of resources, containing around about 100,000 tonnes of nickel plus copper plus cobalt. So two deposits discovered in the first 2 years of exploration. The nickel exploration will continue, albeit it will probably be greatly outweighed by the amount of exploration that's being done for the lithium, but we will still continue with the nickel. And that nickel, the two deposits we've identified to date, Ridgeline and Andover, located only 200 metres apart. The Andover deposit outcrops as nickel oxide at surface. The Ridgeline deposit is buried. It's a blind deposit. It was discovered by the exploration team using geophysics, so a really good discovery, because it's not exposed at surface at all. It starts at about 200 metres down below surface. So those two deposits would probably be exploited and mined by a single decline access, which would go down there and then basically turn left and right and access and then mine both of those deposits simultaneously. And certainly all of the mineralisation that we've seen there is very clean, very high quality, and produces very good concentrates. So just where to from here for the rest of the year? Well, basically on the lithium side, it's drill, drill, drill. Don't stop drilling, just drill for the rest of the year. Multiple drill rigs, 4 to 6 rigs going simultaneously. Let's see if we can identify that and confirm that there is the potential for 100 million tonnes plus of mineralisation. There's only 9 in the world, and we believe Andover potentially could be the 10th and make the top 10 in terms of large lithium projects around the world. And of course, we will continue with the nickel as well. So we see that the next few months for Azure and the Andover project to be extremely busy. Thank you very much.
Thank you very much, Tony. Can I just draw your attentions to the screen for a moment, please?
Good morning, Pat.
How you going, mate?
Hey,
How you doing?
an Uber doesn't cut it for you.
No,
Welcome
only in
aboard
style.
my
The next question is does he sing from this point? Is this the carpool karaoke of the MD of the resources industry standing in front of us? This is our next presenter, Pat Williams. He is the mild-mannered MD of Revolver Resources. They've actually got a pretty healthy social media profile. And I was unaware that there was a Carpool MD Resources show, sir, in which you star. Are you wishing that I'd never found that, aren't you?
You've done your homework, Chrissy, that's
Yeah.
for sure. You've done your homework.
Do you sing? I didn't watch it to the end because I only just managed to pull that up. Do you actually sing?
It takes a few glasses of red wine, but yes.
Okay, that's interesting. Look, you're here today to talk with us about investment opportunities. And of course, we're going to Queensland and we're going to your near-term copper. So let's listen to that. Put your hands together for him and think of that other picture in your mind.
Estic felic com angus dos polis. Now, I apologise for any of you who speak fluent Catalan, but that's the politically correct way of saying what Margaret Thatcher said a number of decades ago, which is today I'm as happy as a dog with two, you know what. The reason that I'm happy is briefly outlined in the next 5 to 10 minutes. It's a big story, and I'd really welcome you to come by the booth and hear some more. But essentially, what we have in Revolver, oh, sorry. That's what I say, mate, it's not how I look. Look, essentially what we have at Revolver is you know, a story with multiple pathways to growth from this position right now. We're in a great market with a great commodity. Okay, we have two fantastic projects, each with two growth pathways forward. And, you know, within that, the opportunity to generate our own self-sufficient cash flow to further fund our primary exploration goals. As a snapshot right now, probably the most important thing here is we've recapitalised the business. Just last week, we put $5 million capital raise away to fund our progress going forward. About 240 million shares in the market, around about $40 million market cap, great buying right now, heavy management stock ownership, and because we're still inside our first 2 years since listing, there's still a strong escrow position, so, you know, tightly held stock with a lot of, you know, sticky, supportive, patient shareholders. The business is run by, I think, the right blend, you know, not too many of one type. We've got a very, you know, comprehensive blend of capabilities, both from strong technical operations delivery and project development and commercial thinking. So the two projects, both in Queensland, both purely focused on copper, both set now. You don't get these things just pop up overnight, okay? At least that's not my experience anyway. So the projects have had careful, considered, judicious stewardship over a number of years. Revolver was formed in 2015. Private company, 7 years private, a lot of money, you know, $10 million privately into the business to identify and de-risk projects. Brought them to the market 18 months ago, and we've gone, you know, supercharged since then to deliver what we have right now. The first of the projects in the Mount Isa block, elephant country, and we certainly have lots of smoke that indicate that we're on the trail of some elephants. So we're in the Mount Isa block, the right postcode. This is the project we've had since 2015. It's gone through some excellent stewardship. Previously was WMC's highest rated base metals exploration project. It got relinquished in the merger with BHP. We picked it up, and the only company that have done work on this project since. Multiple phases of work since 2015, lots of diamond drilling. We're north and undercover. So, you know, unfortunately, those some of the earlier speakers have talked about green rocks on the surface. We don't have that luxury. We're undercover. We need to be exploring at depth. So multiple phases of careful work, lots of drilling and geophysics. And we've built a significant library of complementary data, and that's the process that Revolver's followed. Is we don't do a phase of work, go there's a target, go drill it, okay? It's layering up and building that picture over time, and that's what we have for ourselves now. So at Project Osprey, you know, 5,000 metres of drilling, multiple phases of geophysics. Since we've listed, we've taken a step back and recompiled that information, relogged, reassayed, alteration modelling, and we find ourselves sitting not with one, but two mineral system heavyweights, an IOCG halo and clear signs of Mount Isa base metal mineralisation. So we're positioned, so late last year, an additional layer of data has been added. Large regional heli-EM program, again, has put in some further basement conductors close to and proximate where we've done the drilling. So we've got ourselves multiple vectors of information-rich indication that we're closing in on some of these targets. So again, just to simply demonstrate on the left and on the right. So, you know, it's not uncommon for, you know, a phase of field exploration to generate an idea and you go pop a hole in it. You know, this is, you know, expensive country, you have to be careful. So on the left, we've got magnetic base layer with the EM targets on top. On the right, we've got the gravity base layer with the EM targets on top. So we're getting ourselves the confidence and the realisation that the layers of data are all converging, you know, with drill hole information, with the geochemistry, to give us a very strong level of confidence. We're moving drill rigs into this region. They had a lot of rain over the last summer period. So we'll be coming in to drill here over the June period, and certainly looking forward to bringing those results to market. Now, in terms of layers of data, the company itself, Revolver, you know, since 2015, has progressed significantly on its own, but with the help late last year announcing the work that Geosciences Australia have done with the regional MT work through Central Australia and up to the northwest. The results that came out from that survey within a month from releasing that work that identified some deep crustal hotspots, the indication that we were for the longest time sitting somewhat isolated up there by ourselves, but within the space of a month, we found ourselves surrounded by the majors, identifying that we sit on top of a Geosciences Australia identified hotspot that has similarities to both the Olympic Dam and Ernest Henry systems. So look, it's an exciting time with that project. We can't wait to take it forward. It's been a careful, considered period over a number of years. It's culminating now in a phase of drilling that we're certainly looking forward to finding out what's there. The Diane project, the second of what makes me fairly excited and fairly buoyant about the year that we're certainly heading into now. The Diane project is Australia's highest grade ever producing copper mine. Average ore grade in a direct shipping ore circumstance of over 22%. Okay, it ceased in the 80s. Copper was 50 cents a pound. So we started with a very tiny footprint at Diane in 2019. The VMS system, we started with the belief that where there's one, there's more. And in just over 12 months since we've listed, we've grown an 800 square kilometre tenement package. We've regionally explored. We've identified the targets for exploration upside. And as early as January this year, we drilled into some of those targets close by and have identified ourselves, clear signs that we're in a VMS system adjacent to, so it's ticking the boxes that we came into Diane with the remaining ore body that in and of itself, represents a commercial opportunity to help the company capitalise itself. But we've also identified that, and satisfied ourselves that in a VMS context, they occur in camps and clusters. Where there's one, there should be more, and we've gone, okay, this is it. This is what we're looking for. So the hole we drilled that intersected the VMS stockwork mineralisation. It was close. We ran downhole. The downhole EM conductor plate has given us a strong signal off-hole proximate. So again, immediate follow-up drilling that we'll be undertaking this year. So wrapping up in a nutshell, Revolver as a business is a steady, considered, measured organisation that carefully manage the funds that we raise. We focus on delivering meaningful outcomes. We will find, discover and bring to market copper opportunities that will satisfy the future demand. Thank you very much for your time, Booth 44, and I welcome any challenges to sing, maybe even Chrissy.
Would you mind, sir, taking a photograph of myself with the great karaoke king of the place? And we can put that on the Revolver Resources website as well. How's that? Here's the microphone. There you go, that's yours, Beatrice. Good on you. Thank you so much, sir. That was a really interesting talk, and also interesting to hear the backgrounds of, that we all share up here as well. I didn't realise you spoke a little bit of Catalan. I was wondering where that comment was going until I made the connection with the two resources and all the rest of it. Andrew Denning is going to be last on the stage, but before he comes up here, we're going to just recap and see how we went with that question a little bit earlier. So, what is your favourite battery metal? At this point in time, lithium is the clear winner. So 38% of you on lithium, 25% with copper. Now, is it your favourite though? Should have perhaps put a little bit more on that question, shouldn't we? Is it your favourite one to invest in, or perhaps been a little bit more specific? All right, one more to come today. Andrew Denning, can you come up and join us, please, sir? You don't sing as well, do you?
Definitely not.
No, you have to get a Guernsey on that show. He's the founder and the Managing Director and CEO of Sarama Resources. He's got over 30 years' experience in the international mining arena. He's been in Africa, UK, Russia and Australia. Favourite continent, though, is?
Africa.
Africa, and that's what he's here to talk about with us today. Would you please make him welcome, everyone?
Thanks, Chrissy. Okay, hello everybody. It's good to be here, and I'd like to thank RIU for slotting us in as a late entrant. But I'll get straight into it. I'm aware that lunch is the next session, so I don't want to eat into people's lunchtime. Forward-looking statement. I won't go through that. Read that at your own leisure. Sarama itself is a company that's been around for a while, but we're only a recent entrant to the ASX. So we listed on the ASX in May last year. That was Euros Hartley. I was a major sponsor of this event, listed us in May. We raised $8 million as part of that listing. So we dual listed on the TSX and the ASX. So there's a bit of a history there. I'm quite happy to discuss that with anyone that wants to come to the booth. But basically, the company I ran prior to this was called Moto Gold Mines. We made a large discovery in the Congo. We took that through until we got taken over by Randgold. That's producing 800,000 ounces a year now. So basically, we took the management team from that, put Sarama together, kind of rolled that forward, listed on the ASX last year, had a capital injection to advance our projects. We operate in West Africa, in Burkina Faso, geologically a very well endowed jurisdiction. We've got a very large land position in the country, in the southwest of the country. We operate in the Hyundai Gold Belt. There's a number of large mines there. The endowment there is kind of well over 20 million ounces. The value of the company is underpinned by our Senatura project. We've got around 3 million ounces on that project as it stands now. A lot of that's within 150 metres of surface, so we haven't been chasing that to depth. And our recent drilling that we did last year, we really just focused on oxides. And with that, of that 3 million ounces, about a third of that's oxide. So from a development point of view and an economic point of view, it's pretty key to us. The oxides typically run to 50 metres. They'll have a very good mining cost profile, which I'll talk about shortly. And about 2/3 of the resource is over 2 grams as well. So, the project is very good as it stands now, but there's still a lot of exploration runway involved in that. The Tankoro deposit itself, which forwards a bulk of the ounces, sits in basically part of a very large mineralised camp. So Next door, Endeavour Mining, which is a Canadian-UK company, has a deposit there. It's about 1.2 million ounces. It's continuing to grow. So in that particular area itself, there's close to 4 million ounces within a 5 or 6 kilometre radius, and most of that's shallow, and there's still a heck of a lot of exploration to do in the area. Importantly for us, the resources is through a scale that will support an economic development. So we've done quite a lot of work on that internally, trying to frame up the project and decide when we stop drilling and when we start developing. As part of that work last year, we looked at a couple of different project scales, and one of the things we looked at, I guess, was the cost of capital, the jurisdiction where we work, and how we optimise a project on an EV per share basis, not necessarily on a project NAV basis. And we've embarked on doing a study. So being Canadian, it's called a preliminary economic assessment, which is basically a study you do pre-feasibility. This is being done in quite a bit of detail, and we're looking at a staged development and, I guess, fast-tracking the project to get it into development. I think the other point to note, I was just having a quick look, the gold price in Aussie dollars has just ticked through $3,000. In US dollars, it's close to all-time highs. We see the gold space as obviously a very good space to be in, particularly from a longer term. I think, I've seen a number of lithium prospectors, producers or whatever, and people are very excited about that. But I think, gold's a long-term investment play. I think it's something at the moment that's perhaps a little unloved, and I think I am kind of surprised, given where the gold price is at, that there isn't a lot more interest. But with respect to Sarama, when it comes to gold price and gold price leverage, we're very well positioned. So we've already got a large resource that underpins the company, but that's still growing as well. We completed 21,000 metres of drilling last year that was primarily shallow oxide-focused drilling, had 7 new zones discovered in the main mineralised corridor where we work. Best drill result was 21 metres at 7.5 grams from surface, and that's all finely disseminated gold, so it's not lumpy quartz gold. So we don't kind of get those big spikes. It tends to be just very evenly distributed gold. So we're very levered to the gold price. We've got a project that underpins the value of the company. That's basically in the pre-development phase, and we're doing a study to frame up what that looks like. As far as the board and management goes, we're all very experienced in the industry, as Chrissy mentioned, of 30 years in the industry. Quite a few years of those are in Africa, and I think Africa's a place that you need quite a bit of experience to understand how to navigate the various idiosyncrasies of the jurisdictions and as the politics kind of comes and goes. But the board, it's chaired by Simon Jackson, who's also the chair of Predictive Discovery, which we've got a great deposit in Guinea. He's on the board of Resolute, so he's a very experienced guy. Adrian Bias is in the audience. He's a geologist, but he's someone who, I guess, champions assets and just likes to bring them to account. And then Steve Zninovich, he was a director of Lycopodium, and he's been working in West Africa since the mid-90s. And then the management team, we've all worked together for a number of years, predominantly technical background with a few other bits and pieces thrown in. Capital structure is still fairly clean. We don't have a large warrant overhang, which for a Canadian company you quite often get. We just did a small top-up raise the other day that was well supported by existing shareholders that put a bit of money in the treasury. And then the shareholder breakdown itself is pretty good. We have a very good institutional shareholder base that have supported us over a number of years, the largest being Sun Valley Gold, who have been in since we were private. Burkina Faso is a jurisdiction. I won't spend a lot of time on this except to say that geologically it's very well endowed. It's a very well trodden path for Australian and Canadian juniors. I think anyone who follows West African resources is probably the most recent Australian success story there. They're just, I think, in the kind of later stages of project financing to take them through to 400,000 ounce of production in Burkina Faso. That project's built on time, on budget, but the most recent project built there is Orzone's Bombore project. So they put out their quarterly today, doing 160,000 ounces a year, sub $1,000 operating costs. It's the same as what you see at WAF, but they're doing a bigger production. It's the same as what you see at the mines near us in the Hyundai belt, same deal. They're all sub $1,000 an ounce, all in sustaining costs. So I think one of the attractions of these jurisdictions is the quality of the deposits. They all typically start at surface, and the endowment is huge, and the exploration costs, the discovery costs are low, typically sub $10 an ounce. Just quickly, 3 projects. The Sanatura project, which is the one I was talking about, the red one there. We have a joint venture with Endeavour Mining as well. That's got around 700,000 ounces on it. That joins our Sanatura project. Then we have a third early stage exploration project in the next belt over, which is a very exciting project, very good early stage results, but it's something we're kind of cooking along in the background. Looking more closely at the Sanatura project, I guess the colour that you see on there, that's all soils. So we use gold in soils as a pathfinder to take us into areas to drill. The soils there give very good response typically for gold, except for where you have laterites. But I think the point to note on this image is just the sheer scale of where we work. So if you look at where the Tankoro deposit is, that's around 2.5 million ounces. That sits in a corridor that runs for about 16 kilometres and it's 1 to 1.5 kilometres wide. I'm not sure how that works here, but in Perth, that's from the city down to the port of Fremantle. If you include what runs off into Endeavour's ground, that's plus 20 kilometre long corridor that's mineralised the whole way. So the point of this is just to really show the size of the system of where we work. And the important thing to note is that, you know, we're already through a critical size for development and all this sits in there as upside. So I guess our aim is trying to find the most efficient way forward for the project and look at how best to bring that to account. So the PEA that we're working on that I mentioned before, that should be completed in June, July. It slipped a little bit from where we wanted it, but that should frame up the project quite well. That's actually being Canadian listed, it'll be a 43-101 compliant document, so has full independent sign off on everything. Probably the thing that makes it stick in Australia is we will use inferred resources, but we get very good conversion from, you know, inferred to indicated as we upgrade the resource. Looking more closely at the Tankoro deposit, so this is the main deposit at the moment. It's around 2.5 million ounces in this particular deposit. The central deposit area there accounts for about 80% of the metal. I think people get a little bit confused because it's such a big corridor that I think it's spread out everywhere, but it is actually concentrated in two main areas where we've got some main dilation zones. But what we see in here is two tracks of mineralisation. The porphyry dikes, they're quite linear. Where we get cross structures through, we get elevated grades, elevated ounces. So we're really looking for more of those repetitions. We did 20-odd thousand metres of drilling last year. We had 7 new zones, some of which are shown on there, and importantly, a whole new exploration analogue to follow up out of that work. I think the other point to note is most of the ounces here are shallow, and the internal project framing work we've done, typically, you know, for the first kind of 7 to 10 years of the project, we'd expect the strip ratio to be sub 5. Also from the internal work, we'd expect the all-in sustaining costs to pretty much be in line with what you see in Burkina Faso. So all of that for the project looks pretty good, but there's still a lot of space in between where we've drilled to find new things and add a lot of ounces. But like I said, the challenge for us is working out when to stick a pin in it and when to push it ahead and how best to push it ahead. So just quickly, this is a couple of pit shells. So you can see in the pit shells, the MM1's got 1.4 million ounces in pit shell, and the MC has 500,000 ounces. So you can see where the pits bell out there. There's high grade shoots that run to depth, and you're getting grades there at 10 metres at half an ounce. And once again, that's just finely disseminated gold. And that goes right through to surface. And you can see from the last drill program, we drilled a new zone outside the modelled resource with 21 metres at 7.5. That started at the surface. So the met on the oxide's very good. The leach times is 2 hours to 90% recovery. So from a development point of view, we're just really targeting the oxides here to get them in as quick as we can and basically punch the grades in for rapid payback. This is a new area we discovered in the southern part of the deposit. This is very different to what we've seen elsewhere. So typically the gold's in porphyry dikes, and like I said, where we get dilation zones, we get elevated grades and blowouts. This is a flat zone, so we've drilled this for almost 1 kilometre and about 300 metres down dip, and it cuts across the existing mineralisation. It's got elevated grade. You can see some of the grades there, 7 at 11.5. That's pretty much true widths, ends in mineralisation, and this is all oxide, and it's all oxide drilling, and it's pushed the oxides here to 80 metres. So once again, from a development point of view, it lends itself to, you know, adding pretty good cash flow metrics. The second deposit, Bondi, we acquired this from Orezone Gold. We think there's a lot of opportunity here. It's very well drilled in the top 80 to 100 metres, but below that, it's not well drilled at all. They've drilled in the central area there where you can see it pushes to depth, but if you look off on the left-hand side there, you can see the block model. Those blocks are 2.5 to 5 grams. There's no drilling underneath that at all. So we've got areas like that to drill. And if you look at the historical drilling, you've got 70 metres at 3, that's from surface, 50 at 5. It's a pretty spectacular deposit, and it's not had a lot of love. So, and then I guess just to wrap up the regional opportunities, there's significant consolidation opportunity when you look at Endeavour's deposits in the area. When you look at our deposits, if all that comes together, you've got a 5 million ounce project, a couple of thousand square kilometres and a lot of runway. And we do have other pretty exciting exploration targets in the area as well that have delivered very good early stage reconnaissance results. So just to wrap up, we think now's a great time to invest in gold. I think whatever gold stock you look at is pretty undervalued relative to the performance that they're doing, particularly African. If you look at the lowest cost gold producers on the ASX, they're all African gold producers. And that's a lot to do with it's a more stable cost environment, but also the quality of the deposits that you're dealing with in Africa are substantially better than a lot that you find in other jurisdictions. So we have a PEA nearing completion. Drilling is going to just continue to add ounces. Very well positioned strategically from a consolidation and a development point of view. We've got a large resource underwriting the value of the company. And I guess finally, a very, very compelling valuation when you line it up against all our peers. It's pretty much the lowest valuation out there that we kind of struggle with why it sits at that level. Thank you.
Thank you, Andrew Dillon. Good on you, Andrew. All right, team, you're released. We've got half an hour for lunch, and I'll see you all back. We'll ring the bell. So 17 down, and we've got 17 more great investment opportunities to go. Enjoy your lunch.